I want to start, though, with Disney because it looks like it found its magic again. A surge in streaming, strength in its theme park business helped overall results last quarter, and the stock is getting rewarded. Shares of Disney are higher this morning. So here are some highlights from the earnings call just moments ago. It plans to add merchandise, games, and experiences to its Disney Plus streaming service in the spring. And CEO Josh DeMarco, which I have to get used to saying that now.
This is the second earnings call.
Right. With no more Bob Iger.
Yeah.
He says the NBA Finals and the NHL drove ESPN to its strongest Q3 viewership in about a decade.
Yep.
So Disney says it's highly focused on continuing to reduce costs. We know they've had a number of job cut announcements over the past couple of years. It seems like that's going to continue as they try to rein in expenses. And also sort of buried in all of this, Disney said it recorded a tariff refund of about $100 million. Okay. So that's interesting.
Very good.
And if you remember, its rival Comcast came out with earnings recently, and its Universal Resorts in Orlando did not do very well.
Yes. So it's a little bit of a difference there. But,
so Disney is definitely doing something right.
Yep.
Okay, so let's move on to AMD because that stock is up 142% so far this year. And this morning here in the pre-market, down about 9%. You know, every metric it beat. And it beat big, revenue and profits, but apparently not enough to satisfy Wall Street's, hunger for these, these lofty numbers. And also, I guess, hurting the stock a bit. Elon Musk came out and said, you know what, SpaceX not going to buy its chips from AMD anymore. They're going to go over to rival NVIDIA. He didn't really say why, though. Maybe they were more competitive on pricing.
I don't want to do buy, hold, sell here. That's not our mandate. But I do want to remember, Paul, that Facebook cratered for a year after their IPO.
Until they found their footing.
And then they found their footing, and away we go. I'm not.
So you're saying that could be a SpaceX story?
No, I'm not saying that. I'm just observing that Facebook's IPO was a crater for a year.
Well, you want to know, talk about lofty expectations. Musk says he wants revenue, or he believes revenue will hit $1 trillion by 2030.
2030?
Yeah. And he says AI is going to get them there. All right, let's go to PINS is the ticker symbol. We're talking Pinterest. That is the image sharing platform that we know Tom Keene is on all the time. Sure. We have to try to get him off it. It's delivering 18% revenue growth, record users, 640 million people on the Pinterest. Okay. But the stock is sharply lower this morning. Lukewarm sales guidance. That's what's tripping it up. A lot of competition, it said, for digital advertising, which is basically its backbone, right? Including from companies like Meta, because a lot of the business that would go to Pinterest goes over to Meta's Instagram.
Yep.
Also, during the call, Pinterest CEO is saying that the World Cup ending and Amazon's Prime Day moving to the second quarter actually impacted its brand spending and thus its third quarter guidance.
Yep.
So there you go.
It's tough digital advertising. I mean, there's a couple of monster platforms, and then everybody else trying to fight for the crumbs.
Yeah, and with the crumbs are left, and everybody fights for the crumbs. Yep. All right, let's talk Shopify. Shares jumping here. This is a Canadian-based e-commerce giant reporting sharp growth in the second quarter, a more aggressive than expected forecast for the third quarter, driven by gains both its subscription software and merchant services unit. So that's good. Free cash flow margin expected to be in the high teens as well. So shares are up 24% right now in Shopify.
Saw that. That's a nice move.
That's a big move.
That is. I mean, online shopping.
We're going to talk to Dan Ives about
this. Today.
We got a question in from this Bloomberg.com subscribers ask radio, and I'm sorry, the innovations, like, does AI in all of its digital uproar feed on Shopify?
Yeah.
And I think the answer is yes.